Federal regulators announced that another bank had been closed and that the government would ensure that all depositors of Silicon Valley Bank would be paid back in full as US rushed to keep fallout from the collapse of the large institution from sweeping through the financial system. Whether US regulators saw the dangers brewing early enough and took enough action before this week's collapse of Silvergate, Capital Core and much larger SVB financial group is now teed up for debate. President Biden has promised that US administration will hold those accountable for this mess. Where was Hindenburg and its founder? Could they not predict such a massive banking collapse is what many are of course asking as well. Joining us at this point is Dr. Jaijit Bhattacharya, President, Center for Digital Economy Policy Research. Quickly bring you in here, Dr. Jaijit Bhattacharya, on what you make of this second major bank collapse in the United States of America.
As you rightly said, that there is obviously a question being asked that such a significant bank has been, has collapsed, and the government did not take steps a priori, especially when short sellers were sending out messages way back in Jan. And this is a critical bank from an innovation perspective. And as you know, the Californian economy per se is largely a innovation economy. The GDP of California and the GDP of India are quite similar. And a whole bunch of it is being supported by the Silicon Valley Bank. And if you look at the losses that they had, that's about 1% of their total value that they were holding. They were holding value of about $200 billion, and about $2 billion is what they had actually reported as a loss, which could have easily been papered over. But the US government did not react to it on time, and they let the bank slide, leading to panic, which, unfortunately, whatever happens in Silicon Valley spreads to rest of the technology centers, and it has impacted startups and their funding even in India. So I personally believe that there has been a lapse from the US government side in not providing sufficient oversight on this bank and other banks for that matter. The bank per se did not do anything wrong. If you look at the steps that they took, they essentially bought government bonds. So you can't be hauled up for buying government bonds. What really went wrong was that the government started increasing the rates of those bonds. Increasing the Fed rates, whereas the bonds were bought at less than 2% as their return. And clearly, when the Fed went ahead and increased the rates of the Fed bank, the bonds that Silicon Valley Bank was holding, their value decreased in the market. So when they had to actually service the cash requirement, they could not go and sell these bonds back at its original market value. So you see, the core of the issue lied with the government and not really with the bank. And then the government not stepping in on time and creating this crisis is a lapse which cannot be condoned.
Where do things go next, though? How can Dr. Bhattacharya further bank collapses be prevented now by the US, or do you believe that is inevitable now? What is coming next, and what should the US do immediately? Because this is obviously going to impact, going to cause global ripples, which is what we don't want.
The larger question is whether there is a large-scale recession coming. Is the 1930s getting repeated? Are we staring at a large recession again looming in? And the Silicon Valley Bank being the first to spread the contagion and therefore lead to the domino effect that Dr. Sharad Kohli was talking about. Now, I would not like to believe that that's happening. The US is a very resilient economy. There have been challenges that the US has faced, but there are many indicators which does indicate that it's not in a good place. The US economy is clearly not in a good place, and the folding up of these two banks in quick succession could actually trigger many more such banks getting impacted. Now, what the government should do is something that they've already done. The fact that they stepped in and they signaled that the government is right behind these banks, which is actually a contrary to what they said initially. Because initially they said that the government will not step in, they will do a laissez-faire attitude, that it's capitalism. If a bank collapses, it collapses. Too bad. And I think within a day they turned around and they said that, look, we're going to support it. And again, as Dr. Kohli mentioned that how will they support it is an enigma. I think most probably what they will do is they will still use taxpayers' money to buy shares into the bank, so that once the bank recovers, then they will get the money out and pay a larger return back to the shareholders, which is what they did in 2008 with the automobile companies which were going down. So the government actually invested into these companies and then they stepped down. The funny part over here is that the US had been lecturing around the world, asking governments to not interfere in the in the industries, in the capitalistic process. If a company goes down, they should go down.